We are going to talk about single audits and uniform grant guidance. Myself, Nancy Snyder, I'm one of the partners in the Healthcare Tax Exempt team, and I head up the Healthcare Tax Exempt practice for the Bonadio group along with Janine Mangione. And today presenting with me is Heidi Bressler, and Heidi is part of our quality control, our compliance arm, if you will. So she's going to go through some of the audit findings, and obviously both of us will be monitoring the chat button and getting back on questions that folks might have. So don't be afraid to ask any questions that you might have. We will do it through chat, and we'll try and repeat the questions and get the answers out during our presentation if at all possible. And if not, we will get back to you after the presentation. I should mention also, we will share the presentation at the conclusion of our show today, and then we'll get back to everybody with the PowerPoint presentation if you so choose to use it. So with that, I will get started. So I have to give our one little slide here to tell you that these are our opinions, and they are not the responsibility of anybody else. They're what we consider to be the content. So any of the sessions and the information that you get are based on current interpretations of the law. And as many of you know, the law seems to be changing a lot with regard to federal awards. So we'll talk a little bit about some of those changes also. Our agenda for today is that we will talk about the CARES Act funding and the impact of it, and why some of you who never thought you would attend a single audit presentation are now attending a single audit presentation. We'll go into detail on what is a single audit, because as I mentioned, a lot of you didn't have to worry about that in the past. And then we'll talk about some of your requirements as an entity that's subject to single audit. And then, as I mentioned, Heidi's going to go through some of the common single audit findings, just to give you an idea of the types of things that we look at as auditors and what we report back, not only to management, but also to the funders. So I'm going to start right away with a polling question. And the reason being is that I wanted to at least find out if there were some folks on here that haven't been involved with single audits before. So our first polling question is, how familiar are you with the single audit? And A is never heard of the term, somewhat familiar, although haven't had recent experience, or very familiar. So I'll just give everyone a minute for that, and we'll go forward in a second. Looks like most people are very familiar, so that's a good sign. But we have some that have never heard of them, and some that are somewhat familiar but haven't had to go through one. So we'll go through in a little bit of detail here, but obviously if you have questions, certainly let us know that. I'm going to leave the poll open. There's about 20 people that haven't answered yet. If you want CPE, you have to answer the polls. Give you another 10 seconds. 5, 4, 3, 2, 1. I'm going to close the poll. And let's see if I can see it. So single audits and why it's important. Coronavirus aid relief and economic stimulus impacted all of us in a lot of ways. Most of you hear it referred to as the CARES Act. And one of the most significant ways is that it's federal dollars, so those federal expenditures that you may have in any fiscal year may subject to single audit requirements. So some of the CARES Act funding is subject to single audit and some is not. So the Paycheck Protection Act, the PPP loans that you may have received are not subject to single audit. And it's interesting because when they first came out, it was a big question mark. We knew that the loan wasn't, but it wasn't clear whether the forgiveness would be. So we wanted to wait for clarification on that. So that is not subject to single audit, but the Provider Relief Fund, the Coronavirus Relief Fund, and the Education Stabilization Funds are all subject to single audit. So in terms of how that might impact you, as you can imagine, depending on your level of funding, you may be thrown into single audit this year and have a single audit for the first time in a long time or the first time ever. Just as an added note here, there is a 3-month extension that was granted for recipients and subrecipients of the COVID-19 funding, with the original due dates from October 1st of 2020 through June 30th of 2021. So this 3-month extension applies to your single audit, and we'll talk about the deadlines for that in a few minutes. You do have to maintain a reason for your delayed filing, so keep that in mind. That just don't think that you can just say, oh, we're not going to do our single audit for the 3-month extension. You have to have COVID-19 expenditures that are separately identified in your CFA, your data collection form, and if applicable, your audit findings for any of those new and existing programs that you're reporting on. So next slide. The fair market value of donated personal protective equipment must also be disclosed in the footnotes to your CFA. So if you receive PPE from the state, from another entity, those dollars have to be reported. Those dollars don't have to be audited, though, so your auditors may mark your footnotes to your CFA as unaudited, specific to the PPE equipment. So it's just an added thing to keep in mind as you're getting ready for your single audit. Make sure you pull that value of your PPE that you may have had donated to your organization. So what is a single audit, and why do I care? Why do you care? In layman's terms, a single audit is a review of the way in which your organization has managed the federally sourced grant. So are you in compliance with all of the regulations with that grant award? And how did they come up with the term single audit? Well, before 1984, every federal agency could have their own auditing requirements or their own auditing standards. So in 1984, the federal government finally got its act together and said, oh no, we don't want to do it that way. We're going to do one set of rules for everyone. And it did make it a lot easier for organizations that received funding from a lot of different sources. And then you may have heard the term Uniform Grant Guidance, and you may hear your auditors saying Uniform Grant Guidance or UG. And in 2014, the rules were updated to simplify the federal rules with respect to single audits. And you'll see that I italicize simplify and more efficient in my definition here. And the reason for it is that it may have simplified it, but it also made the rules a little bit different. So there were additional requirements on your single audits and on your auditors of those single audit responsibilities. So just keep that in mind. Single audits are the federal audit requirements in Uniform Grant Guidance. So you hear those terms sometimes interchangeably, and you may still hear people refer to OMB A133, which is an old term. The Uniform Grant Guidance actually took over for the A133 guidance. So do I need a single audit? The answer is yes if you spent over $750,000 of federal funds in your fiscal year. And notice that I didn't say you had revenue over $750,000. It's actually if you've spent over $750,000. And it goes based on your fiscal year. So whatever your fiscal year is, that's how you report on the federal dollars that you've spent. If you had all of your federal awards and they were over $750,000 in one program, you can do what's called a program-specific audit, and it's a little more limited in terms of procedures and the amount of reporting that needs to be done. So what do we as auditors look at when we say we have to do a single audit for you? It's actually two parts. We look at the financial side of things to make sure that your books are in order, and then we look at the programmatic side of things to see how well the program met the goals and objectives that were spelled out in the grant. So keeping in mind that every grant is a little bit different, which is why you read through all of your grants and make sure that you know all the terms. Are the results public information? They are. The schedule of federal awards is part of the data collection form that gets filed, and that is publicly available information that you can search and look up someone else's single audit results. So that has been a recent change, that it's much more, much easier now to get copies of those. Why are the results important? Well, as you can imagine, the results are important because as you go for additional funding, if you have a deficiency in your current single audit, they may deny you funding in the future. You may have to pay back for disallowed costs, and you may have a suspension of your current funding. So you don't want to be in that situation. So understanding what your responsibilities are key. So what are your requirements as an organization? So internal control responsibilities are a big one, and they modified this a few years back. So you'll see that you have to maintain and establish an effective internal control over your federal awards. So most people say, oh, we have internal controls. Well, it's very specific for federal awards, and they tell you how you have to ensure that you are compliant with the guidelines that they've established. So you have to comply with federal statutes, regulations, and the terms of the award. You have to evaluate and monitor the compliance, and you have to take prompt action if you find any instances of noncompliance. So you have to be aware of what your internal control structure is and any findings that take place. And you have to take reasonable measures to safeguard protected personally identifiable information. So they call this out specifically in the internal control responsibilities with respect to single auditing, which most of you think of in terms of your HIPAA responsibilities and those, but it goes even deeper. So internal controls have to be established, and you have to maintain effective internal controls over the federal awards, and they have to be in compliance with the standards for internal controls in the federal government, the Green Book, if you will, or the internal control framework established by COSO, or the Committee of Sponsoring Organizations. So they look at it in terms of your control environment, your risk assessment, your control activities that you have in place, information and communication and monitoring activities. And then each of those is broken down either by the entity level and by the different divisions and departments that you have. So you really have to look at your overall internal control structure. The most common thing that I hear is that finance isn't involved in the grant when the organizations first sign on, so they aren't aware of what all the requirements are until it's already a done deal. So making sure that you're part of that decision-making process is where this comes into play. The procurement rules changed a few years ago, and they became much more specific. And so if you're new to the federal granting and expenditure area, you want to make sure that you've got the proper procurement rules in place. So you have to have written policies and procedures, and those have to include that the things that are being purchased are necessary and reasonable, that the purchases are open to competition, and that you adhere to the conflicts of interest policies and disclose any violations and address any conflicts of interest. And also, you have to be aware that some federal agencies have specific rules about conflicts of interest. So make sure that you know who you're doing business with at the federal level so that you can be compliant with the conflicts of interest policies. And then the last one here is to contain that they all contain the proper documentation, that your policies and procedures have all of the elements that are necessary. Acquisition planning, as part of your procurement, you're going to manage your supply chain so that you're going to avoid any unnecessary purchases or avoid paying too much for those purchases. Consider whether it's better for you to bundle purchases or to break out purchases, and consider leasing and purchasing alternatives. So what makes better sense from the overall use of your funding sources? And in some cases, these requirements are spelled right out in the grant document. So again, I can't stress enough to read the grant documents. Conduct joint purchasing where it's advantageous. And then also there are instances where you can use the federal excess and surplus property. So there are government services administration that you can use for certain purchases. On the procurement side, continuing on, you have to maintain oversight to ensure that the contractors perform in accordance with the terms and conditions of the contract. And you have to maintain the written standards of conduct covering the conflict of interest. So make sure that your conflicts of interest policies cover those that you're doing business with and that you're aware of any conflicts that might potentially be there. And the last one on this page is you must maintain the records sufficient to detail the history of procurement. So if you were to be audited after the fact by a federal agency, that you have all of your documentation in a row for what type of contract you had, who you selected, how you selected, what was your basis for that contract. And I'm going to put up polling question number 2 here, and I'll launch that. And the question is, have you done a procurement policy for your organization, yes or no? I'll give you a few minutes to answer that, and I'm going to just keep going on with procurement for a minute. So number 6 is that you must provide full and open competition with respect to procurement, and then you must use one of the following methods for procurement. And they're listed here, but I'm actually going to skip to the next slide because I go through them in detail. So let's look at what each of those is. The first one is micro purchase, and micro purchase is anything less than $10,000. You can award without soliciting competitive bids, and you have to determine that the reasonable price is that what you're getting is a reasonable price. So keep that in mind, that it's okay not to have a bid for those less than $10,000, but you can document why it's reasonable that you went with who you went with. Under small purchases, and some of us may laugh because we don't think that $250,000 is small, but from the federal government's perspective, small purchases are anything between just over $10,000, so $10,000 and 1 penny, up to $250,000. And in that case, you have to get a price or a rate quote obtained from an adequate number of qualified sources. And true to fashion with the federal government, they don't define adequate number. So you have to determine what is reasonable. Is it 3? Is it 5? Is it 2? Because there's only 2 out there. But adequate number isn't defined, and you have to get the quotes ahead of time before awarding, and you have to be able to maintain that documentation that you fulfilled all those responsibilities. So over $250,000, there's 2 different ways that this can go. One is sealed bids, which is actually preferred for construction. So you have to have it formally advertised, you have to have it publicly solicited, and it has to be a fixed contract awarded to the lowest responsive and responsible bidder. So it doesn't say that you have to go with the lowest bidder. They have to be able to prove that they can do what you asked of them. So that's why it says lowest responsive and responsible. So if someone didn't follow your guidelines with respect to what they quoted you, but they have a lower price, you do not have to take that lower price. So keep that in mind. And then the other side of the over $250,000 is competitive proposals. And in these cases, you have to have an RFP, and it has to be publicized. You have the proposal solicited from an adequate number of sources, and I won't even have to say it to you. It isn't defined any place, but you have to determine what that adequate qualified number is. And then organizations must have written methods for conducting the evaluation and proposal received. So you have to have guidelines established prior to starting to go through those proposals on how you're going to award the contract. And you'll see in some cases when you see these RFPs, it spells out exactly that 10% is to have the proposal in on time, or everybody who is late doesn't get it considered. So those specific criteria for how you're going to analyze the responses have to be there. And then the contract awarded to the firm with the proposal most advantageous to the program. So price, but there's other factors too. So again, doesn't have to be lowest bidder. You really have to document what you considered in your process so that if you are questioned later on, you can support that. I'm going to quick close our poll before I get to this last section. And move forward. So non-competitive proposals, they're only appropriate when the goods or services only available from a single source. So this is a pretty rare thing. And when I first presented this probably 4 or 5 years ago, the second bullet was one that I didn't really think much about, but I have thought about it over the last 10 and 11 months. There is a public emergency, And in the case that we've all seen over the last few months, that sometimes shipping comes into play. So the pandemic very well could be the public emergency that requires you to document why a non-competitive proposal might be appropriate. And then also, after soliciting the number of sources, competition is deemed inadequate. So no one else really does what you need them to do or could provide the services in the time frame that you needed them to do it in. And then the last one is that the awarding agency expressly authorized a non-competitive proposal. So keep in mind that that has to be from the granting agency itself. It can't be you saying that you named someone in the budget that you submitted, so that's who we're going to use. It's only allowed if the granting agency accepts that and tells you who to use. The other piece after procurement is subrecipient monitoring. And the one thing that we've seen with a lot of the CARES Act funding is that there is a lot of dollars being divvied out to other providers of services. So it's good for you as a recipient of federal awards to know the difference between a subrecipient and a contractor. And the easiest way that I can say this is subrecipients are someone who is going to continue to do what the grant is asking of them. A contractor relationship is where they are doing a piece of something. So they're providing goods or services that are kind of their normal standard operating procedures versus providing a service to whoever was eligible to receive the grant funding or the grant dollars in the programs that were established by the grant. So what do you have to do with respect to subrecipient monitoring? The requirements of the pre-award are that the subrecipients have some experience, that the subrecipients have had an audit in the past, that the subrecipients have the proper staffing and systems in place, and to the extent that any federal entity is monitoring that organization, you want to know about that too. So you want to know about their prior experience with any monitoring that's taken place from a federal entity. The required information in the subaward, you have to give them the federal awarding agency and the pass-through entities information and contact information. You also have to give them the catalog of federal domestic assistance number and name of the contract that you're passing through, because what happens is that subrecipient may very well have to have a single audit themselves, so they have to have all of that information. And then you have to have an approved federally recognized indirect cost rate, or they have to be able to accept the de minimis cost rate. So it's one or the other. If they have an indirect cost rate, you have to know what that is because you have to pay that in terms of that grant, or they have to accept the de minimis. And after the award, you want to make sure that you've reviewed the financial and performance reports for that subrecipient. So your responsibility as the one who actually was awarded the federal funds is that you have to monitor the subrecipient. So reviewing their financial performance, verifying if they had a single audit done, that they included the award money that you gave them under that federal program, and then ensuring that corrective action of any deficiencies have to be taken care of, issuing management decision on relevant subrecipient audit findings. So if there is anything that you find out that the subrecipient did, make sure that it doesn't impact your single audit based on that fact. And then consider whether the audit results or other factors necessitate adjustment to the pass-through entity's records. So making sure that everything that was disclosed in their financial reporting is reported the way it should be on the pass-through entity's records, and consider whether the enforcement actions are necessary. So if there was anything that they did that make you have to do something in terms of your grant reporting or in terms of your reporting to the agency that gave you the grant, make sure you know that too. So the compensation for personnel services, this page is right out of the guidelines in the compliance supplement, but let me take you to here, which gives us a little bit of the flavor for what the prior page says. So personnel services, so all of your time that you're reporting for salaries that you're paying or wages that you're paying to people who are performing the grant document. the grant document programs. So all of the personnel expenses have to be supported by a system of internal controls. We talked about internal controls at the beginning. They have to reasonably reflect the total activity for the employee. So you can't exceed 100% of somebody. You can't say, well, they were 80% on this program and 80% of the time they were over here. Nope, you have to look at every person as a standalone and say, I can't go above 100%. And you can only reflect what they truly spent in that program to that program or to that grant. And then you have to support the distribution of the employee's salaries or wages, or if it's benefits, that they've worked on the federal award. You have to make sure that you have documentation to support it and make sure that you've documented it appropriately. So budget estimates are okay when you're applying for the grant, but when you're doing your final reporting, you can't report budget numbers. You have to report actual expenditures for their time and expenses. So you have to make sure that your systems are in place, that the estimate is reasonable in the first place, and that if changes occurred, that you identified them in a timely manner. So say someone that you had put in for a grant didn't have time to work on that grant, you have to make sure that you've adjusted the records appropriately so you don't still charge their personnel expenses through to that grant. The non-federal entity's system of internal controls has to include an after the fact, so you go back and you make sure that what was charged to the grant is actually spent in the grant area. And then that you have substitute processes or systems for allocating salaries to the federal awards in the case that you have indirect costs. So you have to have a basis for your estimates or for your expenditures that you're allocating to the grant. So doing a rolling time study, so making sure that the estimate that you put in place originally bears itself out when you look at time studies, doing case counts for how many cases they actually saw, or any other qualified quantifiable measure. And then, am I a low-risk auditee? And the reason I put this in here is we usually come out to do an audit, a single audit, and the first time through people say, why am I not a low-risk auditee? Where do I have risk? And it isn't that at all. You have to have been audited for the previous 2 years in order to be considered a low-risk auditee. So I just bring this up because sometimes this is a term that causes angst when the board or the audit committee or the finance committee see the report and it says you are not a low-risk auditee, but we always try and explain that's why. So you have to have single audits performed in the last 2 years. They have to be filed timely. The financial statements have to fairly be presented in accordance with generally accepted accounting principles. And there can't be a going concern opinion in order to be a low-risk auditee. You cannot have any material weaknesses over internal control of your financial reporting, and no material weaknesses with respect to your major programs or Type A programs, and no material compliance findings on your Type A program. So you have to test the compliance with the grant, that you did all of the things the grant told you to do in the way that it told you to do, and you had your proper reporting and all of those things. That's what it means by compliance findings. And then the last one there is that you had no question costs over 5% for your Type A programs, your major programs that we as auditors test. How can you best prepare for your single audit? And the one key thing, the first one on here, is prepare your CFA earlier, schedule of federal awards. So gather all of your information for every federal award that you receive and put the numbers to paper and look at it and determine, do I even have to do a single audit? Am I over $750,000 in expenditures this year? Okay, I am. What are all the programs that I have? So start listing out all of those CFDA numbers to make sure that you are in good stead as far as having that conversation. Meet with your auditors and identify questions with them. Tell them, here's what I have right now. I'm waiting to hear back from this funder because they didn't give me a CFDA number, or whatever the case may be. Make sure that you're doing that on a regular basis. And then get all of the support, your award documentation, everything that you have with respect to that, and get the person that is responsible for running that program, the person that's responsible for reporting back to the funder, so that they can be on board with the auditors and know what's going to be asked of them when we come in and do the audit at year end. And then get answers from the federal agencies or the pass-through agencies as soon as possible. So if you've gone through your grant document and you don't see a CFDA number, make sure you call and ask. Maybe it isn't federal funding after all. Maybe it is federal funding and someone just forgot to put the CFDA number on there. All of that information is information that you'll need to actually prepare your CFA, to know what your responsibilities are and what your auditors are going to ask you for in terms of what programs they need to test versus which ones they do not. Do some reading. So the Uniform Grant Guidance is a good place to start with respect to reading, although it's not very riveting, but if you can't sleep at night, that might be a good place to go. Looking at the COFAR frequently asked questions document, so taking a look at the compliance supplements, specifically in 3.1 and 3.2 of the compliance supplement, it gives the requirements with specific grants, so you can look up your CFDA numbers and see what is required, and it'll give you a good indication of what the auditors are going to ask about and what they're going to look for, so you can get ready. And then the green book that I mentioned earlier with respect to internal controls. If you don't know whether your internal controls would be in compliance with the green book or not, it's probably time to start looking at some of those things. So I am going to open up to Heidi for the single audit findings. And if you just bear with me for 1 second, I'm just going to pass over to Heidi. She should have rights now. And again, if you have questions throughout the rest of the presentation, I'll monitor the chat and try and get back to folks as they come up. Heidi, I think you're back on mute.
Okay, can you hear me now? Great,
yes.
Okay, thanks. Thank you, Nancy, that was all really good information. So now we're going to focus on the audit findings, and we're going to focus on the single audit findings for each direct and material compliance requirement, and we're also going to take a step back and take a look at the yellow book findings and the uniform grant reporting requirements, and also what a finding is going to look like in the financial statements and the context of a finding. And as we're talking about these common findings, I definitely encourage everybody on this call to think about your own organization and think about the policies and procedures and what could really affect a finding in your organization and how to avoid findings. So first we're going to talk about the common deficiencies related to the direct and material compliance requirements. So a lot of people on this call are familiar with single audits. So these direct and material compliance requirements are applicable to each federal grant, and they're listed out in the compliance supplement. So you'll see here on these slides that the findings are split between controls and compliance. And it's really easy to get confused about what's a control over compliance versus what's a compliance item. And the best way I can explain it is to think about a process. Think about the whole process. For example, driving to work. Getting from point A to point B, that's a process of, where we're going. So getting from home to work. And that's the process. So we can relate that back to the compliance requirements over the grant. Complying with the grant, that's the process. The control over the compliance with the grant and the control over, for example, getting from home to work is making sure we're doing all of our safety checks. Right? So we're wearing a seatbelt, we're checking the mirror, we're making sure that we can get from point A to point B safely. Same thing with compliance with a grant. The compliance with a grant is the process. How do you make sure that we're complying with that grant from the start to the grant to the end of the grant? So who in your organization is checking to make sure that the requirements are complied with? Who's reviewing and approving the expenditures? Who's reviewing and approving the proper documentation over time allocation? And that's how you can delineate a control versus a compliance. In the COVID times, there are some additional issues with controls, right? Because our controls may have changed before the shutdown, during the shutdown, and after the shutdown. So I definitely encourage everybody on this call to think about that and think about how your controls may have changed during the COVID time, during the shutdown era, and definitely document it, because this is something that your auditors will absolutely ask you about during field work for your single audit. In terms of activities allowed or unallowed, this is the compliance requirement that focuses on expenses. So we want to make sure that the expenses are allowable. And here, the controls focus on the review and approval of those expenses before they're reimbursed by the federal grant. A lot of times we see the missing documentation as shown on the second bullet point. So definitely take a look at the documentation of the federal grants and make sure that all of that is accounted for. For cash management, this requirement describes the policies and procedures to make sure that reimbursements are submitted after expenses were incurred. So in a reimbursement type grant, we want to make sure that those expenses were incurred and the expenses were paid prior to the federal reimbursement. Also, we want to make sure that the organization minimizes any time, if it's an advance grant, minimizes any time between receiving the federal funds and spending out in the federal program also. For procurement, Nancy spoke a lot about procurement earlier. This is a very important part of the single audit. We want to make sure that each organization has updated policies and procedures to comply with uniform guidance. As Nancy said, these rules can change, so we definitely encourage everybody to take a look at the written policies and procedures over procurement and make sure that they're up to date. For reporting, this is a direct and material compliance requirement that has been emphasized for the CARES Act funding and for COVID funding for year-ends 12/31/20 and later. So you can definitely expect your auditors to focus on the reporting aspects of the grant and make sure that the controls over reporting are properly documented in the organization. The CARES Act funding, a lot of them have specific special reporting that needs to be reported to the federal agencies. And in the compliance supplement and in different guidance related to the different federal funding, the auditors are strongly encouraged to test the reporting requirements. So as a organization, definitely encourage you to take a look at the policies and procedures over any special reporting that you may have to follow as a result of the CARES funding. The auditors will focus on making sure that the reports submitted are complete and accurate, and also that these reports are submitted timely. Right now, there's a bit of a challenge because the CARES funding was submitted so quickly. So some of the reporting portals are delayed, and we're aware of that, and I'm sure a lot of you are aware of that. We're following that current guidance. So when that is up and running, we will definitely be talking to your organization about that as part of the single audit. Subrecipient monitoring is another compliance requirement that's getting a lot of attention in these times. So we want to make sure that if the organization has any subrecipients, that there are some policies and procedures in place to make sure that any grant requirements are properly communicated to these subrecipients. And specifically, with the CARES Act and the COVID federal awards, we want to make sure that if there are any special communications related to those awards, that those are also passed on to the subrecipients. You can see some of the findings here with subrecipients have to do with the monitoring factor. So if there are subrecipients as part of the single audit federal funds, we want to make sure that the organization is making sure that that subrecipient is doing what it's supposed to be doing. Special tests and provisions, this is different for each federal fund. There's really no way to make it general, but you can see there's a lot of findings related to the Medicaid cluster program. So if this relates to your organization, definitely take a look at these findings and make sure that proper documentation is in place related to this program. Those findings that we just talked about were specific to the single audit. So they were specific to the Uniform Guidance Program. These findings are called the Yellow Book findings. And each single audit requires a report called a Yellow Book report. It has a longer name, but we all affectionately refer to it as the Yellow Book because it is actually a yellow book. And that's not very creative, but that's actually the truth. So the Yellow Book does report on the financial reporting aspect. So, for example, findings related to the Yellow Book are significant deficiencies and material weaknesses over financial reporting. So these findings relate more to the financial statement audit rather than the Uniform Guidance Audit. It focuses more on those journal entries, the closing journal entries that may have been reported as part of the audit procedures. So if you received any proposed journal entries from the auditors, they may be reported as part of the Yellow Book findings. The Yellow Book also describes any material noncompliance with grants and contract agreements and laws. So there is a chance that the Yellow Book findings may overlap in some way with the Uniform Guidance findings. But again, the Yellow Book really focuses on that financial statement audit rather than the compliance audit. Okay, now we're going to go to polling question number 3 here.
I think it's up, Heidi. Are you aware of any findings you may have from conversations thus far? I'll leave the poll up if you want to keep going.
Okay. Okay, so yeah, so definitely during this presentation, we should definitely think about if there's any findings or if there's any policies and procedures that need to be updated as part of to avoid any findings on the financial statements. So the Yellow Book findings and the Uniform Guidance findings both have very similar formats. Right now we're going to talk a little bit about the Yellow Book findings and how that might look in your financial statement if the organization did receive a finding. When we get to the Uniform Guidance findings, they're pretty much the same. we talk here about a criteria. So the criteria is based on a specific law or statute, and then the condition is the situation that exists in the organization. The cause, as part of the Yellow Book, normally has something to do with the internal control structure at the organization and what happened in that internal control structure at the organization to cause the finding. So was there turnover in the finance department, for example, or did a COVID shutdown possibly cause a finding at the organization? Or did a policy need to be updated? The Yellow Book was recently updated to it's called the 2018 Yellow Book now. And in that 2018 Yellow Book, the Yellow Book encourages that cause to really be focused on the internal control structure at the organization. The effect for the Yellow Book would usually be a journal entry or, say what happened as a result of this finding. The recommendation would be the auditor's, recommendation, pretty straightforward. And the views of the responsible officials in planning corrective action, that is, from the organization. So the auditors and the organization should be collaborating and discussing as to what should be put as part of that views of responsible officials. If there's a single audit that is done also, the organization will have to also prepare a corrective action plan. This is different than the views of the responsible officials in the official finding. So the corrective action plan is a little bit more in detail, and there are some other elements that need to be part of the corrective action plan. But this part, the views of responsible officials in this finding, this is just more of a summary. This is an example as to how a Yellow Book finding might look if one was received in the Yellow Book report. The uniform guidance findings, there are a few more requirements as to what needs to be reported for uniform guidance. So we were just talking about the Yellow Book, which focused on the financial statement aspect, and now we're going back to the compliance side, the compliance audit. So the uniform guidance findings focuses more on the federal programs, and we are, as auditors, we're required to report significant deficiencies and material weaknesses, also abuse and any material noncompliance, and the likely or known question cost greater than $25,000 for a major program. So these question costs normally come from an eligibility requirement or a expense that an auditor may have found that was unallowed. And if those question costs were greater than $25,000, they're required to be reported in the Uniform Guidance Report. Sometimes these findings are very significant, and they may alter the opinion on the federal program. So that second bullet point there describes what may change an opinion to be an unmodified opinion to possibly a qualified opinion on the program. So this delineation really, is a judgment call a lot of times, and sometimes it's based on exactly what happened and if it's a systemic issue and how material the question costs were. There are also some required elements for uniform guidance finding. They're very similar to the Yellow Book findings, so we'll get into that a little bit more. There's also some additional detail that's required as part of the uniform guidance finding. And there are, we have to go through the CFDA title and information, the award year, and also the federal agency, and if there's a pass-through grant, we would need to describe the pass-through entity requirements as well. So we also talk here about the criteria in the finding, and there's an example of a uniform guidance finding a little bit later in the presentation. Right now, the criteria of the finding focuses on the statutes, and that's really important because with the CARES Act funding that a lot of organizations may have received, there's a lot of guidance out there. So there's a lot of FAQs, there's a lot of guidance on agency websites, there's a lot of memos that have been written. The findings in the Uniform Guidance Report, though, should focus on the statute. Any FAQs or memos that were written could support a possible finding, but really the findings for the Uniform Guidance federal programs should be focused right on that statute. And there's an example here. So the example criteria refers directly to the CFR section, and that's how a finding should be written. The condition of the organization is, pretty self-explanatory. It's how the auditor may have found a finding while testing the program. The context just provides the reader of the financial statements a little bit more detail about if the sample selected was statistically valid or not, and either method is appropriate, so it can be statistically valid sample or it doesn't have to be. And also, how prevalent the exceptions or the finding was in the organization. The cause, again, will focus on the internal control structure. This focuses on the internal control structure over the federal program rather than the internal control structure over the financial statement preparation. The effect, so there may have been some funds that needed to be paid back as a result of the finding, or if there are any question costs, those might be part of the effect, part of the finding as well. And here we go into a little bit more detail about the question costs and how they were computed. And if it was a repeat finding, we also need to note that as part of the finding. So that would be included as part of that documentation on that report. Again, the uniform guidance findings also have recommendation and the views of the official at the organization. So if there's a finding at the organization, definitely encourage everybody to talk to your auditor and make sure that the views are appropriately reflected on the report. This is an example of the uniform guidance finding. You can see it has a little bit more detail than the Yellow Book finding. It has all of the federal program information. And then the format of the finding, again, is very similar to the Yellow Book finding with the condition, context, and the auditor's recommendation and the views. So next we have our next polling question and our last polling question. And this is a fun one. Who are you rooting for in the Super Bowl? Chiefs, Buccaneers, or no one? And I believe we've answered all of the questions in the chat so far, but if anybody has any other questions, definitely feel free to reach out to Nancy or I after the presentation, or you can put any messages in the chat as well.
Thanks, Heidi. Just again to tell everyone, we're going to give out the slides. They'll be available to everyone on the call. And if you do have questions as a follow-up, you certainly can get a hold of Heidi or I at any point in time. But hopefully this gives you a good overview of what a single audit is, what kind of findings come up in single audits, what to be on the lookout for, and things that your organization needs to do. And it looks like we've got a lot of Chiefs fans, a few Buccaneers fans, and a lot that don't really care about the game on Sunday. So thanks for joining us today, and have a great day.